car, got a wireless scanner attached to it, and we got an inverter connected to the battery of the car, plugged in the computer, and we started driving through New Kingston. Went up and down New Kingston. And we got, at the time, it was over 100 wireless devices that were connected to your internal networks. Some of them had no passwords on them. We found computers that had no passwords on them, or simple passwords. We're actually afraid to share that information with anybody because at the time we weren't sure we would go to prison. But over 100 devices that were just open to the public. Security policy also communicates consensus, meaning as management, this is what we expect. It also defines roles and responsibilities. Who is responsible for the backups? Who is responsible to safeguard this piece of data? Who should have access to it? Another thing that I've seen is when there is actually an incident. If the procedures for dealing with an incident is not clearly documented, what you'll have most times is a bunch of headless chickens. Everybody running around trying to figure out what to do. How do we mitigate this? How do we fix this problem? Most times, people aren't thinking clearly during a major incident. So it's best to have this documented. When this incident happens, these are the people you inform. After you inform these people, these are the steps we take. This is where the backup is kept. This is the procedure, because you'll be surprised of how knowledgeable people, when there's an incident, sit at the computer screen trying to remember, okay, what's the password again? I had it in my head, I use it every day. What's the password? I can't remember it. It happens. So one of the things you could have in this security policy is to say, okay, the administrative password for all systems, documented, put an envelope, stored either off-site or in a safe. So when you sit before the computer and you're blank, you know where to find it, you pop it out, you're able to get it. Not only that, sometimes if the password is in somebody's head, and this person gets up one day and says, I'm leaving, what do you do? So next you want to identify important information. Other times we don't even think about what's critical to the running of our business. So we're operating, we're making profit, everything is going really nice. But we haven't thought about the information that could hurt our business if it's lost or stolen. Or we don't even know where that information sits. How are you going to protect it if it's sitting on 5, 10 systems and you only know about 2 of them? Essentially, it's not protected. If you protect those 2 systems, then anybody has access to the others, right? You want to isolate your sensitive data. And by isolation, I don't mean lock it in a vault and put some padlocks on it. What I mean is, you're going to control who has access to it. It's not going to be sitting where all the other data reside. If it has to, because you might be able to only afford one system, then you want to ensure that it's encrypted, and only the people who should access it has that access. If you need to access this data remotely, or if you need to send that data, then it's recommended that you use some kind of encryption. SSL is quick and easy, and also a lot more affordable than some of the other encryption methods. It's a big one. Know your employees. How many of us actually do a background check on our employees when we hire them? So this person comes to us, very good resume, represents themselves really well at the interview. So yes, this is the person I want. But do you really know this person? Do you know where this person, you know? I was sitting in college one day, and there was a group of people in the booth next to me. And these people were discussing business information, promotion that the plant will have, date and time, prices. I was sitting there, about two other security guys. Those security guys like to come together sometimes. And we were just sitting there looking at each other, and we were amazed at the level of information just being tossed out. And when people drink, sometimes people talk. But knowing your employees means that you do background checks, get references from people who have worked with them before, and verify these references, because anybody can type up a letter. And sometimes when you get the references, you say, okay, you're compliant, you attach it to the file, and you file it away. Well, how do you know? There was a guy who was working here for years at a major bank, not RBC. And it turned out that this guy he came with master's, PhD, and when I verified this information, this guy had to jump on a plane and run, because it was all forged. Protect your financial data. So those nice ratios that Mario spoke about earlier. Anybody looking at that data can tell a lot about your business, about the performance of your business, about how you run your business. It's not something you want to go out there in the public sphere, unless you're a public entity who wants to report. So you protect your sensitive data, ensure that only the persons who should have access to it have access. But what about when I have secure your perimeter? I'm not necessarily talking about a nice electric fence around your building, right? Because your perimeter is essentially any access point to your business, and increasingly that is becoming the internet. It's becoming network connectivity, because hardly a business out there that doesn't have some kind of internet presence. You use email, you use the internet. Your employees connect to the internet every day. How do you know what's coming in and out? When we say implement a good firewall, a few years ago that would have been it. You implement a good firewall and you could forget about it. At least that's what some people thought. Until guys start creating data that looked quite innocent, quite legitimate. And when that data comes into your network, it lodges itself onto a computer and starts checking your computer to see what you have on it. Okay, credit card numbers, sent off. Banking information, sent off. No sense at all having a firewall if you have an open wireless on your network. I remember somebody at my organization once connected a wireless device to the network. During the course of regular scanning, we picked it up. I sat in the car, in the parking lot. I was able to get onto the network and start looking at shares on people's computers from the parking lot. So the person doesn't even need to come into your building. Antivirus software. So some of us would say, yes, I have antivirus on my computer. Do you know how often it's updated? Do you know if it's up to date? Because These days, you know, if your antivirus is not updated at least once per day, you're not really protected. So people will say, how is it that I have antivirus and I still get a virus? That's the reason. In fact, we've been finding cases where some of the malware, when I say malware, I mean any kind of computer program that acts maliciously. Some of the malware literally turns your antivirus off, does its business, turns it on again. That's how sophisticated some of these guys are. Now this is usually the human element, and as we saw before, it accounts for about 32% of breaches. Strong passwords. It's something that you can preach, but unless it becomes a culture, nobody follows it. Or, what I like to do is to make sure they can't avoid following it. So you set up your systems in such a way that they have to comply with the password policy. But the policy has to be set. You have to have rules against people writing passwords down, put it on a monitor, setting simple passwords, because that's the next thing that people do. When they are forced to remember the password, they set it to something simple. And that's understandable because you're busy. It's hard to keep track of several passwords or remember strong passwords. So what we usually advise people is, don't think of a password, think of a passphrase. So it's a sentence, and you have some way of linking that sentence to your actual password. So you might have a sentence like, or a phrase like, all silly schoolboys. Now the A from that all could be an accent. The S could be an uppercase S. The other S could be a lowercase s. And then the B could be some other symbol that you link to a B. Maybe a percentage sign. And that's a good password. It's short. It's easy to remember. However, it's complex enough so that if somebody uses any automated tool to guess your passwords, it's a lot more difficult to guess. And the big thing is to change your password regularly, because no matter how complex your password is, at some point you might end up typing it when somebody's watching. And you might not even be aware that somebody's watching. But they gather this information and they come back. I've seen people get dragged in front of the court, something that they didn't do because their password was stolen by somebody else. So a lot of people were telling me these days about torrents, and oh wow, we can get this by torrent, and any computer program you want, you could just download it. Huge risk. Because when you do that download, I mean, it might have the correct name. It might say Windows 7. It might say ABG antivirus. But when it comes down, it's actually a malware that's in that encrypted file. When you unzip it, all hell breaks loose on your network. I've seen 1 or 2 computers literally shut down networks, big networks. Paper shredders, writing down stuff. At some point, you'll have to dispose of it. Don't just toss it in the bin. You could easily reach in and get good information from trash. Don't know if you've ever heard the term dumpster diving. There you go. Laptops. People like to use their laptops at bars, in the airport. Be careful when you turn your back. Outsource critical functions. If there's something about security that you don't have the expertise to manage, don't just give it to the accounts payable clerk and say, manage this website. Outsource it to somebody who's professional. Ties back into what I just said. Seek help. there's something you don't understand about security or managing information security risk, seek help. Outsourcing security, hire a consultant. DGS is a good place to start. Ensure that you have sound backup strategies. As I said before, don't just back up and not test your backups. Ensure that you're taking your backups, you're testing them periodically. You're storing them in places where they can be safe from fire and that sort of thing. Security policy, set authority. Just summarizing for you now. So you have a security policy. Identify your critical data and where it's stored. Implement security controls in accordance with the data that you're protecting. Educate your staff. Makes no sense you have a security policy and your staff knows nothing about it. They can't follow it. They can't abide by what's in the security policy. They don't know anything about it. Teach them about acceptable and unacceptable behavior. Backup strategy. Let's do backups again. Talk to people like people at DGS. Ensure that you have the knowledge and the expertise to assist you with what you want.
For this session, I'll be talking about managing taxation risk through compliance review and tax planning. Now, many of us have different views about taxation. Some of us believe the tax system is too complex. Some believe that taxes are too many, and some believe that taxes are too high. While many of us believe that taxes are not used for the purpose we want it to be used for. And regardless of how we view tax, the thing is that tax will not go away. Tax definitely will not go away, so we have to bear with tax. And the best way that we can bear with it is to manage and plan how it affects us. And that is why, ladies and gentlemen, I want to introduce you to 2 tax management strategies that can assist you in your business. Now, these are the 2: compliance review and tax planning. On a compliance review, we have 2 subtopics. And on tax planning, there are 5 subtopics that I'll be going through. Now, let's look at compliance review. What is compliance review? Now, compliance review involves examining accounting and tax records. For what purpose? One, to determine if the transactions have met the proper tax treatment, and also to compute the tax liabilities. Also, in a tax compliance review, we not only seek to identify liabilities, but also to establish whether a business is making overpayment. What you find is that you have some businesses that are making overpayments without knowing so, because they are imposing tax basically on income that are not subject to tax. So a tax compliance review will definitely highlight that. And it will recommend actions to address the possible tax liabilities. And that is why a tax compliance review is aimed at reducing the likelihood and consequences of the adverse impact of taxation. So that's what a tax compliance review is. It is the first tax management strategy that I'm going to look at. So let's look at compliance review. On a tax compliance review, we'll be looking at the major taxes and the associated interest. And I'll also be looking at the typical tax adjustment that a tax auditor will do in case they audit your company. And I'll be looking at those adjustments in regards to payroll taxes, GCT, and income tax. Now, what you see here are the major taxes that we can relate to. Payroll taxes and the various payroll taxes, PAY, education tax, national insurance, HART, general consumption tax, income tax. Now the first step in tax compliance is knowing your tax obligation. That is the first step. And in knowing your tax obligation, you need to understand, you need to know the filing dates, when it is due. You need to know the tax rate, and you also need to know the associated penalties, so that does not catch you. Now, many businesses, what I understand is that many businesses started without knowing that they are supposed to file income tax returns, file GCT returns, and they deduct payroll taxes. And oftentimes, it's a rude awakening to them when the tax department actually send them an assessment. And at that time, it is too late. Managing your tax compliance risk, you should not wait until the tax department contact you. You must ensure that your compliance is in order, your returns are filed on time, and so on. I can recall, when we look at the penalties and interest, let's take a look at the penalties and interest. For PAY, it's 50% penalty, 40% interest. Now when we look at the GCT, we're looking at 15% of the liability if the return is late. We're looking at another 15% late payment of tax, and also surcharge. Now, let me give you a practical example of the impact of interest and penalties. I recall there was a company that filed its GCT return, or was about to file its GCT return on a Friday, the last day for filing. And there was some difficulty. And they were only able to file the GCT return on the Monday. Now, this was a large taxpayer. And I can tell you the interest and penalty was over $1 million just for the couple days. Now, I say that to emphasize the importance of filing your return on time. You know, sometimes you have a 1 day, 2 day mistake. Don't allow that to happen. Because what will happen is that it will accumulate. And when you look at the end of the year and you look at all the interest and penalties that your company has to bear it, or what costs your company, definitely it's not worth it. Now the first tax adjustments, what I'm going to do is look at the tax adjustments. The adjustments that a tax auditor would do if that tax auditor should audit their business. And I'm going to look at payroll taxes, I'm going to look at income tax, and I'm also going to look at GCT. Now first of all, I'm looking at payroll taxes. But before I go into the adjustments, let me highlight how payroll taxes are computed. Payroll taxes are computed on emoluments. And the definition for emoluments, according to section 2 of the Income Tax Act is as follows. All salaries, wages, fees, wages, or provision, and so on. You can continue to read it. What this definition shows is that emoluments are not just salaries and wages for permanent workers. I remember when I usually do tax audit. Peter Gay told you that I was tax auditor. I usually go around with my briefcase and all of that. When I'm conducting a tax audit, what do? I looked at the payroll. And then I do a little computation basically to see whether that we do not put those persons on the payroll. But they are subject to tax. They are subject to tax, although you don't put them on the payroll. And that is why when the tax department comes and they see payments to casual laborers, to temporary staff, all they do is just add them up and just impose tax. Overtime and bonus, sometimes we forget that those are emoluments. Now when you have time, I want you to look back at what is emolument. And you'll recognize that it covers overtime, bonus, traveling allowance, rental allowance, and goods taken for own use. Goods taken for own use. Now if someone has a business and decided to take a bag of groceries and for the weekend, that is subject to payroll taxes. So what the tax auditor will do is to just add up all those bags of groceries possibly every month and then impose the payroll tax on it. Utilities, you really do have some kind of employer who pay utilities for their staff. Domestic expenses also, and credit card. All of those are considered to be emolument and are subject to tax under Section 5C of Income Tax Act. Meal allowance provided during normal working hours. Now many people are confused about meal allowance because they get lunch and all of that. And they might wonder whether they are subject to tax. Now as long as it is accessible on the employee, meal allowance will be subject to tax. If you have a situation where that employee receives a voucher each week or each day, and it can be assessed on that employee, definitely that meal allowance would be subject to payroll taxes. Generally, I must tell you, it is subject to payroll taxes because it is a benefit. But the thing is that when you have a situation of, canteen and all of that, it's very difficult to assess an employee. And sometimes the tax department will actually ignore those meals. Now, what are the important payments to on behalf of directors? Fees paid, domestic and private expenses paid for directors. Many of these are ignored. They are not on the payroll. But guess what? They are subject to tax. They are subject to tax. And that is why the tax department or a tax auditor can come in to your business and find so many things to impose tax on, because guess what? A lot of times we ignore these. Now, let's look at a simple example. Suppose you have not imposed tax on your director's fee or labor, casual labor, or temporary staff, and assume that the tax department audit your company, and you were assessed PAY of $1 million for January 2007. Assume that is the year that was audited. Now remember, the tax department can go back up to 6 years. Up to 6 years. So when you believe that you have escaped, you have not escaped until it is taxable. Now let's look at this. Payroll taxes, assume that you're assessed $1 million, as I said, because you have not imposed tax and fees and all of that. The interest and penalty, as I told you before, if you look back at the schedule, the interest is 40%, the penalty is 50%. For the first year, your tax is over 100. For 2007, your tax, the interest and penalty would be over $1 million. Over $1 million. Now, over $1 million interest and penalty, you're paying that. I mean, that is something that you can employ 1 or 2 workers for who can give you some productive hours. The interest, as you see, the interest come down. Interest is 600, and assume that the audit period ends at September 30, 2012. The total interest would be almost 400% of your liability. So you will be paying a liability, a principal of $1 million, and also interest of 3.8. Now that is significant. And that is why some of us, the thing is that a lot of times there's no negotiation. When the auditor imposes the tax, it goes into the system of the tax department, and the interest and penalty is computed. Now I'm just looking at 2007. You might have periods like in 2008, 2009. I mean, you might have adjustments for 2008, 2009 that would cause much more interest and penalty. Now let's look at the next adjustment, tax type, that I know that the tax department usually look at. Nowadays, the tax department is doing a comprehensive audit. You ever hear about comprehensive audit? Yeah. It's a comprehensive audit. At one time, they usually go in and audit income tax. And then another set of people go in and audit payroll tax. And then another set go in and audit GCT. But it's not that. It's not like that anymore. They have modernized, I would say. I mean, in my time, I usually do one at a time, you know? One audit. Audit one tax time. Now, GCT. A lot of people are fearful of GCT more than even income tax. So let's look at GCT. But by the way, before I look at GCT, I'm just going to remind you what GCT is all about. GCT is imposed on the supply in Jamaica of goods and services, services by a registered taxpayer. Must be a registered taxpayer. Now, what is supply? Because it is imposed on supply, so it is very important for us to know what is supply. And Section 18 of the GCT Act stated that supply means sale, transfer, and other disposition. You can continue reading it. But what I want to highlight is that supply does not mean sales. A lot of people believe that GCT is only imposed on sales. Our services, the sale of inventory, are the core services that a business provides. But it is much more than that according to the definition. How does it work? This is how it works. And the typical adjustments that I'm going to tell you about usually affects the supply, purchases, and expense. We all know about this. It seems very simple. Many people believe that GCT is a very simple exercise. Now, as I said, the GCT auditor usually look at supply. And when they look at supply, they will look to see whether gifts are included in supply. So if you plan to give some gifts at Christmas, and it is the value of it is over $100, bear in mind that GCT is applicable. So all the promotion and cups and, well, I don't know what is not more than $100 nowadays. Almost everything. So if you provide gifts to your clients or for promotional purposes, GCT should be computed. That is according to Section 18 of the GCT Act. Sale of certain assets. As I said in the definition for GCT, for supply, it means sale of assets and all of that, and transfers. The sale of an asset. So, for example, if after this session, this hotel decides to sell the chairs that you are on, they have to pay GCT on it. They have to pay GCT if they decide to sell the chairs. So it's not only the room tax and all of that. Goods taken for own use. How many people take goods for their own use? GCT is computed on it, but not on the value of the goods, but the cost of it. You may be wondering why government imposing GCT on these things.